Business owners have, all sorts of cool things that they can do in order to lower their tax bill and write off things on their taxes, right? One of the most notable things that business owners can do is take the home office tax deduction. You may have heard of it. It is something where basically if you use a certain area of your home for exclusively for business purposes, then you are eligible to take a home office tax deduction. Basically, there's one of two ways to do this. You can do this through the simplified method, or you can do it through the actual expense method. So what you do is you have, like I said, an area that's exclusively used for business purposes. That exclusivity clause is very important. Otherwise, you do not qualify for the home office deduction. Exclusive meaning that area in your home you use purely for business purposes. Okay, so you have that area in your home, and let's say it is 350 square feet in your home that you use. So basically what you do is you have 350 square feet that you are using for exclusively business purposes. And then let's say the total square footage of your house is 1,500 square feet. So then that would mean, like I said, there's one of two options that you can go about deducting the home office tax expense deduction. You can take the actual expense method or the simplified method. The simplified method is pretty cut and dry. If you basically what it does is it gives you $5 per square foot of your home office deduction. So if your business home office space is 300 square feet, that would be 300 times 5, $1,500 home office deduction. Now, one thing to note is that for the simplified method, you're limited to using, for the tax deduction, you're limited to 300 square feet. So even if you claim that your office is 350 square feet, your home office is 350 square feet, and you still elect to use the simplified method, you can only deduct 300 square feet times 5, that $1,500. It's capped at that for the simplified method. So if you have a 250 square foot office times that 250 square feet times 5, your home office deduction is $1,250. That's one way that you can deduct the home office expenses, is through the simplified method. $5 per square foot of your home office up to 300 square feet for a maximum of $1,500 deduction. Now, another thing that you can do is you can take the actual home office expense deduction method. And for the actual expense method, what this does is it considers the actual expenses of your home compared to that of your square footage used for your business. So let's say that your home office in this instance is 250 square feet, and then the total square footage of your entire home is 1,500 square feet. So then right there, what happens is you take that 250, divide it by the total square footage of your home, the 1,500, and you would end up with about a 17% business use, so to speak, of your home. So then you take that 17% and then you apply that to your mortgage interest. You apply that to your property taxes. You apply that to the depreciation on your home. You apply that to the utilities of your house. Okay, it allocates a portion of the cost of your home to your business through how much square footage is allocated to your home office. So in this instance, if you had a mortgage interest of $1,000, property taxes of $2,500, utilities of $3,000, and then let's say that your home cost you when you bought it $200,000. Okay, so then what happens is that you have your home office, which is 250 square feet of your total home square footage of 1,500 square feet. That's 17%. So then you take your mortgage interest times 17%, and you do that all the way here to figure in what your home office deduction is. So once you do that, you end up with $170 of mortgage interest deduction, $425 deduction for your property taxes, utilities. Add these up. For your home office, you're going to get another $1,105, according to this example, of a deduction for your business. And then over here, like I said, also mentioned the depreciation of your home is taken into account. If you bought your home for $200,000, it's depreciated over 39 years. That's about $5,100 per year. According to your square footage, which is your business use percentage of your home, so to speak, you would get an additional $872 of depreciation, which will add to your home office deduction. So this home office deduction, you can in this scenario, it's $1,900, almost $2,000. So you can see how that home office deduction would benefit you. In the actual expense method, even more so than the simplified method, depending on your circumstances, depending on the depreciation that's available for you to take on your home, depending on your property taxes, utilities, and mortgage interest. So that's basically the basics of how the home office deduction works. Now, one thing that people should just be aware of is that when you do decide to take the actual expense method for your home office tax deduction, and you do take depreciation on your home, you can either take it or not. The fact that it's available to you is what matters, okay? So if you take if you take the actual expense method, year after year after year, right, you're getting this very nice deduction through the actual expenses, mortgage interest, property taxes, utilities, depreciation on your home even. That's pretty cool. Now, later down the road, when you go to sell your personal residence, typically, the sale of a personal residence is not taxed as long as you have owned the home for 2 years, and during 2 of the past 5 years, you used that home as a personal residence. Okay? Then you can have a tax-free gain on the sale of your home, if you're single, up to $250,000, and if you're married, up to $500,000. Meaning, if you're a married couple and then you sell your personal residence, let's say you bought your home back in the day for $250,000, you can sell it for a price all the way up to $750,000 and have that $500,000 gain be tax-free. Unless you're a business owner who took the actual expense method for their home office deduction. And then now you have to recapture the depreciation that you took on your house. Follow? So now, let's say that, for instance, every single year that you're running your business out of your home office, you're getting this $872 of depreciation. So let's say that you did this for 10 years. $8,720 of depreciation that you've taken over running your business in that house. So now when you go to sell your house, you're going to have to recapture $8,700 and recognize that as gain. So what does that mean? So for instance, let's say that you have the sale of your house, right? And this is for a married couples, that married filing joint. So again, let's try to keep the numbers a little bit consistent. So the cost of your house was $200,000, which was the basis that we used up here for our home office deduction. Okay. Now let's say that later down the road, it's a couple decades later, you sell your personal residence for $500,000. This gives you a $300,000 gain. Now, for a married couple, typically that $300,000 gain would be tax-free. But because you ran a business for 10 years, elected the actual expense method for the home office deduction, you have this, you took about $8,700 in depreciation. That means of this $300,000 gain, $8,700 of it will be taxable to you, and then the remainder of it will be tax-free. Now, I know what you're thinking when you take a look at that scenario. Oh, it's only $8,700 out of the $300,000 gain that's taxable. Yeah, it's not necessarily material or a big tax burden that's created because you took the actual expense method for the home office, but it is just a little bit of an annoying burden that you'll have to pay tax on the sale of your home, even though normal people don't. So it is just something that you should be aware of. I hope this video gave you a good glimpse into how to deduct home office expenses for your business if you have an eligible home office. There's 2 ways to do it, just to recap: the simplified method and the actual expense method. The simplified method is $5 per square foot up to a maximum of 300 square feet. So that could benefit you for a maximum of a $1,500 business income deduction. Or you can take the actual expense method, which takes the square footage of your business office, uh, compares that to the total square footage of your home. You take that percentage, apply it to your actual expenses of your house, and then that is your home office tax deduction. But then in will come depreciation recapture later down the road when you sell your house. So, hope that gave a good glimpse into the home office tax deduction.